This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, May 31, 2026, and this is the London session. Now, let's get into it. The week starts with the US dollar at a 52-week high, but the market is whispering about a potential pause in the Fed's tightening cycle. With the ECB and Bank of Japan still on hold, the US dollar is the only major currency with a clear path higher. But the question is, will the dollar's dominance hold, or will the risk-off sentiment from Friday's close start to take hold? As we head into the new week, the US dollar is holding strong, with the DXY at 105.22. The key levels to watch are 105.5 for a potential breakout and 104.8 for a possible pullback. The Fear and Greed Index is still in the fear zone at 14/100, suggesting risk-off sentiment is still dominant. The 5-day high in euro-dollar is 1.1686, and the 5-day low is 1.1586. We're also watching for any gaps from Friday's close, particularly in the S&P 500 and Nasdaq 100. The COT data shows leveraged funds are heavily long in the US dollar and short in the Japanese yen, which could keep the dollar under pressure if the Bank of Japan shifts policy. The biggest catalyst this week is the ECB rate decision on Thursday, which could be a pivot point for the euro. The market is pricing in a 70% chance of a pause in rate hikes, but we're watching for any signs of dovish bias. The U.S. non-farm payrolls on Friday could also be a key driver, with the market expecting a solid number that might keep the Fed on hold. The Fed is still in a hawkish mode, with the EFF OMC minutes from May showing no indication of a rate cut in the near term. The U.S. dollar is still the only major currency with a clear path higher, and that's driving the current market structure.
Looking at the technicals, the euro-dollar is trading at 1.1661, with the 50-day moving average at 1.163 and the 200-day at 1.155. The key level to watch is 1.1686, the 5-day high. A break above that could signal a bullish move toward 1.171, but a drop below 1.163 would be a warning sign. The cable is also trading near its 5-day high of 1.3497, and the 1.345 level is a key support. The dollar-yen is at 159.26, with the 5-day high at 159.65. A move above that could take the pair to 160, but a drop below 158.91 would signal weakness.
Institutional flows are telling a story of a dollar-long bias. The CFTC data shows leveraged funds are strongly long in the US dollar, with a net long of plus 4,438 contracts. The asset managers are also long, with a net of plus 22,196. The Japanese yen is the only major currency with a strong short bias from leveraged funds, with a net short of 70,508. The European currencies are also being shorted, but the dollar is the only one with a clear long bias. This positioning suggests that the dollar is likely to remain strong, at least until the ECB decision on Thursday.
The biggest risk here is that the market is underestimating the potential for a Fed pivot. While the Fed is still hawkish, the data from the U.S. is showing signs of slowing growth. The GDP now forecast for Q2 is 4.26%, which is strong, but the 2-year Treasury is at 3.99%, which is still below the Fed funds rate of 3.62%. That suggests that the market is not fully pricing in the Fed's tightening. A surprise in the U.S. data could lead to a short-term rally in risk assets, which would be a headwind for the dollar. Also, the crypto markets are showing signs of a potential correction, with Bitcoin and Ethereum at their highest levels in months. A pullback there could lead to a flight to safety, which would be good for the dollar.
The big picture is that the US dollar is still the only major currency with a clear path higher, but the risk-off sentiment is still dominant. The ECB is expected to pause, and the Bank of Japan is still in YCC, which means the dollar has a structural advantage. However, the US economy is showing signs of slowing, and the market is not fully pricing in the Fed's tightening. The key is to watch for any signs of a pivot, especially after the ECB decision on Thursday. If the ECB signals a dovish shift, that could be a turning point for the euro and other European currencies. For now, the dollar is the safe bet, but the risk is that the market is underestimating the potential for a Fed pivot.
The Fed is still hawkish, but the U.S. economy is slowing. The key is to watch for any signs of a pivot, especially after the ECB decision on Thursday. My 24-hour call, euro-dollar bearish, target 1.163 by next session.
The technicals suggest that the euro-dollar is still in a bullish range, but a break below 1.163 would signal weakness. The key level is 1.1686, and a move above that could take the pair to 1.171. My 24-hour call, euro-dollar bullish, target 1.168 by next session.
Institutional flows are strongly in favor of the dollar, and that's driving the current market structure. The key is to watch for any signs of a shift in positioning, but for now, the dollar is the only major currency with a clear path higher. My 24-hour call, dollar-yen bullish, target 159.5 by next session.
The biggest risk is that the market is underestimating the potential for a Fed pivot. A surprise in the U.S. data could lead to a short-term rally in risk assets, which would be a headwind for the dollar. My 24-hour call, cable bearish, target 1.342 by next session.
The dollar is still the only major currency with a clear path higher, but the risk is that the market is underestimating the potential for a Fed pivot. The key is to watch for any signs of a shift in positioning, but for now, the dollar is the safe bet. My 24-hour call, euro-dollar bullish, target 1.167 by next session.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Forex trading carries significant risk of loss. Always do your own research before making any trading decisions. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the New York pre-market, where we will see how these calls play out. Until then, trade safe.